Don't forget that. Welcome to Silvercrest Opportunity Fund.
Down here. Little breath. All right, 5, 4, 3, 2. We're here today on another episode of the Mobile Mailbox Money podcast. Here with other prolific investors, educators, operators here in the nation. Really top individuals. Happy to have another top seasoned professional out in the industry, educating individuals in niche market real estate notes. Fred and Tracy, if you guys could just introduce yourselves for the viewers that don't know you.
Yeah, go ahead.
Thanks for having us here. Well, Fred and I are business partners and married life partners working together. So we got our start a little bit different, but I started out in 1988 working for a large institutional note buyer that bought seller finance notes. We met, married in 97, started a company together. We've been buying seller finance notes for ourselves and referring some to other investors since then. So we're 30 plus years veterans in the note industry.
Yeah.
And Fred got his start a little bit different.
Yeah, I mean, I was living on the West Coast, and I stumbled into a night class to learn about investing in real estate and valuating homes physically. And the person that was teaching it taught us about notes one week and taught us the financial calculator one week. And I just thought that was like the coolest thing ever. And so pretty much declared myself in business in a 500 square foot apartment and spent $5,000 on a computer and a fax machine. That probably doesn't need to do as much as my Apple Watch does now. But yeah, we've been doing it ever since. It's a great industry. Part of what we love is it kind of works in any economy, whether it's going good or not. It just changes on who's creating the notes and who's selling the notes.
Absolutely. I think given the current financial market, having this at your availability as a capital investor is more important than ever. With highly pressurized residential real estate pricing, you're seeing trouble in multifamily potential because of fluctuating interest rates. Kind of what's your take as an educator, given the current market, why this may need to fit within someone's passive diversification, when they go out and look out in the market, what's your take on that?
Are you talking for sellers or investors?
So say in the seller's standpoint, and then we touch on the investment as well.
Yeah. So, I mean, look, I don't think, unless you're in an obscure market right now, we're pretty much seeing real estate softening quite a bit. When things used to list and sell the same day and then all of a sudden turn into 30 days and 60 days. Now you're seeing people like very antsy. Like I'm seeing people lower prices very quickly. So one of the things about seller financing is that, look, there's not 3% loans out there anymore. There's not 4% money out there anymore. It's not happening again, by the way. So if you're watching this show, don't hang out waiting for that. It's not going to go back down to 3-4%. Should have went there in the first place. But this is another alternative. And one thing that I think people don't realize, and the reason why this industry has gone on carrying back notes for so long is that, look, if you didn't qualify for a note at, getting a traditional finance note at 6%, you probably didn't qualify at 4%. The banks have been very, very tight for several years. So you have an opportunity to use seller finance, financing, sell a property at your higher dollar amount, maybe not even drop the price. You're going to have a lot more buyers interested. And there's some interesting stats about who the buyers are, because a lot of people think, oh, they're all no money down, or they're all, deadbeat buyers with poor credit and stuff. And there's some interesting stats on what the down payments are.
Yeah, Fred makes a really good point. We have for decades now been researching all the courthouse records to compile data on seller financing. So just to kind of simplify, seller financing is when someone sells a property they own and allows the buyer to make payments to them instead of getting a traditional bank loan. And so that seller has all the rights of a bank. They've got a note mortgage or note deed of trust, depending on the state. Because we work with real estate. We work with some mobile home and land notes as well. A little different with mobile home only. I know that's your specialty, Alden. But when we just talk about real estate seller finance notes, Fred was mentioning those stats. There's only 30 billion with a B that was created just last year in seller finance notes. So it's a larger group of paper out there than people realize. So sellers can rest assured that there's an opportunity there. And as Fred was talking about, there's some interesting facts. Not everybody's zero down. Most people have 20% or more down payment when they go do a seller finance note. So that also adds some security to the transaction.
Absolutely. Yeah. That's from the sellers and the buyer standpoint, right? So it
Yes.
fits within current hardships of individuals falling just outside the strict guidelines to a secure mortgage. Most people don't know that mortgage can be bought and sold and traded. On the investor side, given the current market, why do you think that it needs to possibly be a hat within their bucket of portfolio? What's your take on that?
Number one, most people who come to notes like real estate as an asset, but they don't like tenants. So when you buy a note secured by real estate, you have owners in the property making those payments. And so your cash flow, your net cash flow at the end of the day is a lot more because somebody else is paying taxes and insurance and upkeep and maintenance. And you don't have, it's not so hard to manage a note like it is to manage a property.
Yeah, there's a reason there's banks on every corner. This is as close as you get to being a bank. You've got all the benefits of real estate without the, like Tracy said, the tenants and toilets and, 2 a.m. phone calls and things like that. And from an investor standpoint, we love real estate. I just don't want to manage properties and, have repairs done. So if I can own the cash flow, and this is probably the coolest thing for me is I get to set my hot buttons, what my parameters are as an investor. So if I say I only want mobile homes attached to land, or I only want single family residence in this particular city, and I want the buyer to have, already been paying for 2 years. I want to have this credit score. I want this amount of equity, whatever it is. I get to choose that, and I get to choose how much I'm going to pay. So at the very, very least, let's just say a super secure note. Let's just say it's a $150,000 property, and I'm buying a $50,000 first. That means there's $100,000 of the equity behind my note. That's pretty secure. I'm going to sleep at night. If my hot button is security, I'm going to get somewhere between 8 and 9% on that, maybe 7.5. But I mean, I can't go to the bank right now and get 7.5 in a CD or 8% or 9%. And that's with a ton of equity. Now, obviously, if I'm willing to take a little bit more risk, or, maybe if that's not my hot button, then I'm going to get a better return.
It's important to understand that there's risk mitigation obviously built within the program. And how does an individual go about doing that? It's the due diligence steps ultimately to figure out how to structure an acquisition at the end of the day. As seasoned note educators, what's your top 5, say, due diligence items that people need to check off? I think that there could be people even watching here today that fail to feel the comfortability to potentially move forward with a transaction. And really what it boils down to is just those items to check off and figure out what your buy box is.
That's a great, I mean, we have an entire checklist just on that. And I'd say if you go through the entire checklist, man, you've ruled out 9 out of 10 things that could possibly pop up. So what do you think? Top 5?
Well, we always start with equity, and equity is how much skin in the game that buyer borrower has. So how much is their down payment? How much have they gained equity through appreciation of the property? They might have gained equity through amortization. They pay down their balance. So all of those things can establish some equity in addition to down payment. So I would start there. Next, what do you want to add to? I have a 5 list. We usually agree. We'll see. What would you?
Got one on the board here.
Yeah, I always look at equity first. Like Tracy said, as far as, I don't want to see less than 10% equity in the property. Statistics and the numbers show that if someone has less than 10% property, so I go back to 2 things: loan to value and investment to value. So loan to value is the amount that they own on the property. Investment to value is how much I have in the property and what it's worth. And the great way to remember this is loan to value is the likelihood the payments are going to continue if there's a problem. If someone has very little equity in the property, then they'll probably just walk away, and now you have to foreclose. If someone has a lot of equity in the property, they're going to sell the property to get their equity back out of the trouble. So loan to value, likelihood of payments continuing, and investment to value is what is my investment? What's the likelihood I'm going to get my money back out of it if there's a problem? So we can buy partials. We can buy, maybe we buy $30,000 of a $80,000 note or whatever it is, and we're in line there. So those are the equity. That's how we do equity.
Loan to value and investment to value, two different ways to look at that. Next will be the borrower's credit worthiness. How well have they been paying bills and other people in the past? Do they have the ability to make this payment? Do they have the income coming in? So really taking a good look at your borrower. I'd say that's number 2. I think 3 is seasoning, maybe. Do you think?
I think seasoning is big.
And for people who don't know what seasoning
is. Seasoning is how long have they been paying? And I want to say with seasoning, verified seasoning. So in other words, this is by a third-party service that's been collecting the payments. So we have a third-party verification that they have been paying for 36 months, 22 months, whatever it may be. We have that verification. And I do want to put one underlying thing to what we're making as we're making this list. We're verifying all this. So when we say the value of the property and the equity, we are going to get a appraisal or a drive-by appraisal or a BPO that shows the value of the property is really the value of the property. Just because someone says, hey, we sold a house for $130,000 and now it's worth $180,000, that's great. Super cool. You came up with a number, but I'm still going to verify. So it's always verify everything along the way.
Trust but verify, as they say.
Yeah.
And then we start getting into the documentation, the terms,
Title,
taxes, insurance, are real estate taxes current, is the property insured, all the documentation. So that is a big piece of it as well.
So yeah, a couple gems for someone to add within their repertoire to additionally gain those steps forward to actually do a transaction. No one wants to be a habitual educator at the end of the day. The objective here is to do a transaction and gain the confidence within one's portfolio in order to take a step forward. Because like we say, it's more important now, I think, than ever to entertain alternative investment strategies and hedge the market, possibly outside the stock market, in order to facilitate more stability long-term and, guarantee that your retirement income ultimately is going to facilitate you living your days out at the end of the day. And that's financial freedom is what we're all seeking. I've seen you two at multiple note investment conferences, nationally renowned. What are y'all's kind of top conferences that people need to entertain and go check out? Or what are some that you're attending here soon?
Yeah, I mean, so actually we met you at DME, which we think is a really good one. That one has just passed. So if we're talking about going forward the rest of the year, we have, well, I guess we should do them in order now that I think about it.
There's Paper Trail coming up in Phoenix in September we'll be at. Then there's Note
Expo, which is in Dallas. And those are both
in November.
Yeah, those are good from a networking standpoint. We came up with something. We were writing up an article the other day, and it says deals love caffeine. So I learned just as much outside of a session as I do in a session. The sessions I think you learn in, and the networking, it's the networking that makes the big difference. It's, getting tips from somebody, and all those revolve around coffee or cocktails.
Yeah.
I think that's when you hear the really good stories.
Or both.
And then we also ourselves have an online virtual event in February, usually of every year. It's called Cash Flow Expo, and that's for people who want to learn and hear all the speakers online that don't want to travel. But all of those events we think are fantastic.
I love the online aspect to new marketing, new availability to attend events and gain education, and view at your leisure. What else are you guys doing online? I see, obviously, you have an education platform. Can people buy that online and take a class module, or how does that develop?
We do. We have individual master classes if someone's trying to refine a certain area or educate them on a certain area. So if they want to create notes, there's a master class on creating notes. And these are deep dives with a lot of videos. If they want to learn calculator, which everybody should absolutely know how to use a calculator. I don't care whether you buy notes or you invest in real estate or stocks, whatever. So we have that. We have a membership that we open up the doors twice a year. That's the best deal in town. We do that, and that gives them access to everything. So it's like having a subscription to Netflix. Everything we create, everything that we're working on, as long as you're a member, you get access to everything. Those are probably the big ones.
For people just starting out, if you go to noteinvestor.com,
Oh,
that's our
yeah.
blog website, and we have over 300 free articles and videos on there. So we're really about educating people just to get comfortable with how note investing works and how seller financing works and how to protect yourself. And that, that's a great place to start. And we're really want to help people understand how the business works. One of the things I just love talking about too, going along with what you were saying earlier, Alden, is if you're looking at investing as this part of your portfolio, using your self-directed retirement account like an IRA or a 401k or an HSA or a Coverdell education account, those are all great ways to buy notes, because as much as we love notes, we don't get depreciation write-offs like people do in real estate. And so that income can get taxed, but if you put it into a self-directed retirement account, it's either tax-free in the case of a Roth or tax-deferred in the case of the traditional type. So don't forget, notes are a great vehicle for your retirement account or your HSA.
Private lending, collateralized lending, at the end of the day, and getting your agreed upon return opposed to having to just say it's in the stock market, at the end of the day. Most people from a new note investor standpoint don't realize, but if you love notes enough and you buy enough notes, you end up running out of money. And it's cool to see the nimbleness of a note transaction and how one can almost cash out refi a portfolio of notes or their own holdings and things of that nature, which is an inevitability if you end up doing enough transactions. Raising for notes, at the end of the day, as a seasoned note investor, how do y'all navigate that education process for people that have now crossed the barrier and maybe have bought 5 to 10 notes? What's your take on that?
That's a great question. One of our favorite strategies is buying a full, selling a partial, and this is what we're starting to see more investors exactly that have had these notes, maybe been collecting payments for a while, and if they bought it right, maybe at a higher rate, there's a lot of investors, a lot of passive investors out there. I'm going to pick on doctors and dentists and things like that, but they want to be in the game, but they don't want to market, they don't want to run a whole business. And a lot of times these people are happy at a 7 to 8% return. So a lot of times what you can do is you can actually take your note, buy 360 payments and sell off, 240 for the same price you paid for the 360. And now you've got this back end of the note that's free and clear. And if you try to put that in a calculator, it's an error 5 or an infinite return, because you've got no skin in the game, but you own the last set of payments. So a lot of times people will sell off part of a note to recapitalize and get into another note. Maybe they've held on it for a while and they've realized a lot of the income off of it. Now they want to sell it and sell. Maybe they improve the note. Maybe initially nobody really was super interested in it because maybe it had rougher credit and their credit's better. Or maybe now there's more equity. Maybe the value's gone up and there's more equity. And now the note becomes worth more. Sometimes you have institutional investors that buy at a much lower rate. They're like, wow, I can't help but sell this note because they're buying ridiculously good rate.
Yes, I agree with Fred. Partials are number one favorite. Second one would be hypothecation. That's just a fancy word for saying that you can borrow against a note that you hold. Instead of selling off a partial, you could borrow against it. You just want to borrow at a lower rate than what you're got money coming in. And then the third way we like, if people are out there going, well, I don't even have money to buy and then sell a partial, or I don't have money to buy and then hypothecate. If you're good at finding deals, there's lots of people out here like us who would love to buy that note and will pay you a referral fee. There's large institutional companies that buy these notes. They'll pay you a referral fee. So if you're good at marketing and you don't yet have the money and you're on the path of getting there, just know that there's people out there to be happy to take a look at that deal and pay you a referral fee at closing.
Yeah, and I don't want to discount or have anybody think, oh, that sounds like a lower level of this business. Oh, I'd refer notes. I don't have my own money. One, most of us all started that way. Second, we encourage people to refer deals out of the gate because you get to learn the process on somebody else's dime. And third, we refer deals all the time
Yeah.
because it doesn't fit my matrix. It's not an area. It's not a property I want. It's not a deal.
I've run out of cash.
I've run out of cash, I mean, whatever it is. And so we refer deals on all the time because you know what? If you've got it and people know that you want to buy notes, why not get paid? You may only get paid $1,000. You may get paid $5,000, but why not get that? Because the deal came across your desk.
I think that the Burr strategy was really big, for a long time. But I beg to argue that this may be a superior strategy, hedging in contractually agreed upon returns and borrowing against as the bank. You're essentially playing the Rothschilds at the end of the day, moving money with money in stable positions, pulling out your money, with friends and family, and things of that nature. So it's cool to see the nimbleness and development of notes itself and the wide breadth of opportunities that come within just the strategy of notes in general, and how someone may be able to navigate that now, gaining further education into the program and knowing how to exit properly, how there can actually sell that note on the secondary market 10 years from now, and recapitalize. There's all kinds of different programs that people are unaware of. Why? Because it's really not educated on a wide breadth. Most RIAs don't so much have a note segment within their, association. So, it's important to see that they're coming out now on different education platforms online, and even here today to give away these gems of information. People pay a lot of money to hear the things that you guys have to say just within that past conversation of hypothecation and selling partials, and all the above. So I'm happy to have you guys here today. Where can people book on your Calendly if they're looking to, get on your schedule? Do you guys have that available, or?
Yeah, I mean, the easiest way to find us is to go to noteinvestor.com and click on that contact us button, and we still read our emails, and we can send you a link to schedule a call, or we can send you to an article that answers your question. So we're very available. We love the note business. It's been good to us. It's been a good vehicle to earn a living and to create financial freedom. Fred and I met through the business. So we're having a lot of fun now in this semi-retirement phase of our lives, sharing what somebody shared with us with other people. So it's just great to see continuing generations. Like when I got started in this in 1988, the gentleman that taught me had been doing it already for 30 years. He'd been doing it since the 1950s. This is just not brand new. It's just getting refined and made easier over time with technology and access to information on the internet. And just like we're here sharing with everybody today.
Love it. Well, hey, unadulterated value here. Don't hesitate to go back and listen to this interview. Ultimately, it may provide you the knowledge you need in order to move forward with the transaction, or even take some further education. So I look forward to seeing you two, Fred and Tracy, at another event. I'm sure we'll see each other at passerbys. I'd love to have you guys on our mastermind as well. Just to continue open conversation. We have, anywhere from 5 to 20 people on there at any given time for questions, to go over the market, bring deals to the table and things of that nature. But appreciate having everyone here today on the Mobile Mailbox Money Podcast. Tune in, like, comment, follow, and subscribe for more. We'll see you next time.
Passive, really, I think this massive, stable cash flow, lavish, about to finance for the masses, this 14%. In manufactured housing. Really, all the deals I've been doing is kind of hard to keep them counting. Not really, 10% for the year, it's clear that this the new wave. Little competition in my arena. Need a house, man, you call Serena. Strategy so boring, didn't even mean to not remind them. There's another check right behind them, 10% passive. The checks outlined with collateral, 150 performing notes. I think I should take a sabbatical. Adaptable with the terms, justify that 1 year that you earn. 10% in bank quality notes at the market as you concern. Accredited investors seeking stable returns. One thing I've learned, being burnt, you gotta invest long term to move the worm into the earn. Turn the page, turn and earn. Earn the page, earn. Learn the way, earn. Earn the pay, earn the pay. Earn the pay, earn the pay. passive. Really, I think this massive, stable cash flow, lavish, about the finance for the masses, this 14% in manufactured housing. Really, all the deals I've been doing is kind of hard to keep on counting. Not really.